Good evening, traders. Today is Monday, January 23rd. Markets are closed. We had an historic day today. What the markets did was what it had failed to do in all of 2022. Now, what I'm referring to is one of these lines. SPY Futures Weekly EMA50. It could not take that back in all of 2022 intraday. It could not do it by ground and pound. And that's what I'm referring to is just taking it back without the help of a short squeeze. It couldn't do it in 2022. But it did it today. Okay? In fact, for the first half of the day, it took SPY Futures Weekly EMA, it took the 4/8 Matrix 2011 blue line, it took the weekly EMA50 for SPY, and for a brief moment, it took back this major channel top, all in a half of a day. So, what happened was it backtested all the way back to the SPY weekly EMA50 right here. Successfully bounced back up and then closed. So this is historic, this line. Now, it still has work to do. It still has to make sure that it can take over its own. This is its own weekly EMA50, right? So this is SPY Futures EMA50, but this is its own EMA50. It closed pretty much right at the line. You'll see that in some subsequent slides. But what a day. Okay. And to top it all off, there was no bearish divergence on the hourly. This is the hourly MACD. Up and then slightly down. Up and then slightly down. No bearish divergence. As you saw, hopefully, probably in my morning episode, I said, guys, I don't see divergence here. Okay? So that means when you don't see divergence, it means there's not going to be a dump. This isn't going to be a pump and dump, right? So keep that in mind. What a day. Now, remember I told you guys I would never draw a trend line? Well, here it is. I'm a hypocrite. I'm a hypocrite. But I'm doing this to illustrate a point. Here's the top. Here's the top. Here's the top. This is December CPI, 1213. The CPI that went above the top and then it went back down. What is the difference between all of 2022 and this time? The MACD was peaking. The MACD was peaking. The MACD was peaking. This time, MACD is just getting started. All right? That's what I want to show you. Okay? Now, so now that you have this trend line visualized, now you're going to see in the subsequent slides why this trend line would have been missing the point all along. I'm going to show you why. Okay, this is the weekly. Right here. Check this out. I can pretty much say, the bears, your only hope now, your only hope is on the weekly for SPY. If the MACD on the weekly gets stopped dead in its tracks right at the zero line, that is your only hope left. The MACD must be stopped at the zero line, somehow, some way. Because if it is not, if the weekly MACD crosses that zero line, what's happened every time? It's off to the races, guys. And right now, not only is it going up, it's separating from the signal line. The MACD made the higher low notch on October 13th. The hive. The MACD made the low for 2022 on June 16th. So on June 16th, when everyone thought that was the low, that was actually the MACD low. But then it made a higher low notch on October 13th that we know as the hive. So, what is your argument that the MACD is going to go all the way down here and start making newer lows lower than here? How's that going to happen? How? $8.5 trillion of federal fund assets, bonds, and mortgage-backed securities. 8.5 trillion out of 9 trillion is still in the system physically. Inflation looks like it's coming down. And I've argued in previous episodes, markets have already priced in current earnings that are coming out. They've already priced in a recession. So, what is the case that you can make that this MACD line is going to curl and go down or be stopped at the zero line? That's your only hope left. This is the matrix today. See that? That blue line, you're going to see that in a couple slides as well. You'll see that blue line that I call the 4/8. It is the 4/8 matrix 2011 line, because here's the first blue line, second blue line, third blue line, fourth blue line. That's why I call it the 4/8, because there's 8 of them. They keep going up. Set in 2011. If you'd like to try it, just go ahead and throw on a weekly chart for SPY and start connect this with this, and then see where this blue line leads you. It goes back all the way to 2011. And look at that. Back in October 2021, it was respected right there. And respected here. Candle body respected here. Candle tops respected there. Candle body respected here. Goes back 12 years since 2011. Here's the hive. This goes back to 2018 and 2020. So, on January 4th at 10:01 a.m., I sent this tweet out. Thinking an official trend change is in the offing, because of what I've been preaching all along of what the 5-minute MACD during the trading hours took back. I'm sorry, not the 5-minute MACD. On the 5-minute chart, the 5-minute EMA50 was taken back during the trading hours. January 4th at 10:01 a.m. Let's look at what January 4th is. It was right here on this date, right here, when I call for that trend change. And as of close today, we are at the highest point of all of January. Despite what I know you guys like to call rising wedge This was a rising wedge. That was a rising wedge. Therefore, that's a bear flag. But at the end of both wedges resulted in higher prices. Price action, as I've been saying and tweeting, price action lies to you. Price patterns are a function, or not a function of, price patterns like rising wedges, head and shoulders, cup and handles, whatever you want to call them. Price patterns are an observation of price action, which lies to you. Wasn't a bear flag at all. Why wasn't it a bear flag? Because the MACD was making higher lows, higher lows, higher lows, higher lows. I was like, I was saying back then, I said, you guys, this ain't bearish. This is not bearish. So there you have it. 5-minute chart. Didn't even come close to this morning on this thick band of support that I had drawn out here. Didn't even come close. I was thinking maybe, well, let's see if it wants to revisit that area. Nope. So, I mean, this band is so thick, I didn't even bother like trying to put these in any particular order. It just doesn't matter. When it's that thick of a band, it doesn't matter. It doesn't matter who's really in what specific order in there. Okay? There's your 4/8 matrix blue line right there. Was it honored? You bet it was. You bet it was. Set 12 years ago. 12 years ago. And it was honored. You bet it was. It consolidated under that and then blasted up. Right there. Right there. And then right here, it tried to find support. Failed. Come back up. Found resistance. Come back up. Found resistance. You bet it was. And that was 12 years ago, my friends. The path of the matrix was set a long time ago. And these are all of the guardrails the market makers are following. Every single one of these, like the blue lines, and here's the top of the channel, you know, let's see, here's another channel trend line. All of these lines go in exact opposite of the traditional trend line. The traditional trend line is going this way, when all along the market maker in the matrix is following lines that go this way. Not this way. Do you see now? Everything you know about trend lines, the market makers have been following the exact opposite rules of trend lines. Exact opposite. So no, I don't believe in trend lines. I believe in channel lines. I believe in regression lines. I believe in best fit lines. I believe in lines that, you know, all of this is, all of these lines started and run parallel to the hive. All of these lines started first from the hive down below. Let's see if I can. Oh. It's not that one. Hold on a second. Maybe I can just go over here. And yep. Oh, barely right here. This is the hive. I just started one line and drew all my parallel lines up. Because I showed you in previous episodes, oh, this is a while ago. The hive started on December 15th, 2021. I showed you that trend line. It goes all the way back to October 13th. from December 15th, 2021, before 2022 even happened. Before 2022 even happened, it already started the trend line that goes all the way to October 13th. This one goes this is the hive. This goes all the way to October 13th. All lines above it, this blue one, this black one, this blue one, this midline, this blue one, this black one, this blue one, this top of this channel goes all parallel to the hive. All of it is parallel to this down, to this first channel bottom. No trend lines, guys. No trend lines. Okay, so that basically wraps up today's presentation. Please follow me on Twitter if you'd like real-time charts, real-time plays, play-by-play, as we're doing today. Which, by the way, today I did not trade. Okay, I didn't trade. As soon as I saw we went up some major resistance that goes back months to years, I'm like, I don't know what's going to happen with all this. I'm staying out. I'm staying out of the matrix today. I just sat and watched, and I armchair quarterbacked it. I was like, okay, well, yeah, I see this coming, I see that, but I didn't trade. I'm like, no, I'm not. I know a few of you did trade. You got more guts than I do. So, but you later admitted, you go, yeah, today was tough to trade. I said, yeah, I'd say so. Coming up on some serious resistance. Okay. So, don't forget to listen to your favorite music while you're trading. Helps you get into the right state of mind to hopefully be in focus. And if you like this video, please give it a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 00 Woe, signing off.